Welcome to Daily Drive for Monday, May 8th, 2023. I'm Jamie Butters, Executive Editor of Automotive News.
And I'm Callan Walker. Today on the show, Automotive Ventures founder and CEO Steve Greenfield joins the show to talk about the ever-evolving state of automotive venture capital.
Somewhere in the middle, the pendulum has to settle between being extremely entrepreneur-friendly, as it was for the last couple of years, to right now being a little bit more investor-friendly.
Automotive Ventures provides consulting resources and venture capital to automotive entrepreneurs. A little more than a year ago, it launched Dealer Fund, which invests in early-stage technology intended to help dealerships operate more efficiently using money from dealers themselves. It also has a Mobility Fund, a $7 million fund that focuses on dealer principals. I spoke with Automotive Ventures founder and CEO Steve Greenfield about how the funds are doing in such a volatile time for investors. Steve Greenfield, welcome to Daily Drive.
Jamie, always great to join you. Thanks for having me.
So you have a dealer fund and a mobility fund. Tell me a little about the two of them. How big are they? What are their purposes? And what kind of investments have they made?
So 2 years ago, 2.5 years ago, we closed our first fund. That's our mobility fund. It was a $7 million fund, our first. We've now made 19 investments out of that fund. About a third of our investors are dealer principals, which led us to the second fund, which we're just in the process of closing right now, which will end up being just shy of $20 million. And we'll have probably about 45 to 50 dealer principals as LPs, as our limited partners, our investors. It's very vertically focused. So whereas the first fund is sort of horizontally focused anywhere in the world, anything mobility related, this fund is very vertically focused on taking money from car dealers and then deploying it into solutions that benefit car dealers.
Makes a lot of sense. Of course, there are a lot of those startups, and if they see something that's good, they want to be a part of it.
Yeah, I think, you talk to dealers and, they like the fact that they get to check two boxes, right? One is by investing in things that they can uniquely help with, we should be able to get outsized returns for them out of the fund. But equally important, or in some cases more importantly, they're going to get access to early stage technologies that can really benefit their businesses.
So you said that one is just now closing. It has not made any investments yet?
We've made 3 investments out of that fund.
Anything you can talk about? What's one that you're excited about?
Well, excited about all of them, but I think the one that we've made first was a company that we actually invested out of our first fund too, WarCloud, which helps dealers with warranty processing back with OEMs. So submitting warranty claims faster with less errors and getting paid quicker on those warranty reimbursements.
That's a pain point for a lot of dealers?
Well, it's interesting. Yeah, it is. Sometimes the dealers don't realize. It's a very manual process where typically they've got a clerk that handles this full time. But those invoices, until such time as they get submitted back to the OEMs, that's money waiting for them, right? So from a cash flow standpoint, we can speed up that cycle and also eliminate any of the human capital costs and make the whole cycle quicker.
Sounds like a smart play. Think about investors in startups these days. It's the investing climate has turned quite a bit. Of course, we've been through very turbulent times. What's it like right now with the challenges to the banking system, that especially those mid-sized banks that are awfully important to startups, higher interest rates, general economic anxiety about the risk of recession and all that? How's that affect the decision-making of the funds or the growth prospects for your portfolio companies?
Yeah, it's a great, astute question. I think the latter really has the biggest impact, which is sort of, I would chalk it up to confidence right now. Many of the folks with capital, there's an all-time high of sort of dry powder, right? Capital that needs to get deployed, that's already in the accounts of VC and private equity and family offices. But there's a lot of caution right now with the environment and what it's going to look like over the next year. As we've seen, public valuations have come down. Late stage private company valuations have come down. Where we tend to hunt, which is very early stage, what we call seed stage, valuations haven't reset as dramatically. But just in general, it's become, I think I would summarize it by saying the pendulum has really swung from being very entrepreneur friendly in a fundraising environment. Valuations were high. Entrepreneurs were in control, to being very investor in control now. The pendulum's really swung to the benefit of the investors. We're seeing less funding happen. Investors become much more cautious and valuations come down, and also even just investor-friendly terms start to weave their way back into some of these term sheets.
Can you give me an example of that? Like the more friendly terms?
Yeah, I mean, as you would if you were investing. I mean, when the entrepreneur has a hot company and valuations are high, there aren't a lot of terms that can be added in, right? So the entrepreneur can take money at whichever valuation they want and say, look, I just want your money, no strings attached. At this point, there are things coming in like liquidation preferences, additional oversight from a governance and board positioning, et cetera. Companies or investors that otherwise wouldn't have been able to ask for board seats are asking for board seats and just more oversight and governance, which is probably the right thing, right? From a standpoint, somewhere in the middle, the pendulum has to settle between being extremely entrepreneur friendly, as it was for the last couple of years, to right now being a little bit more investor friendly.
Tell me about your future of mobility thesis. What's the big idea there?
Yeah, so if you had a chance to look at my May Intel report that we just published this week, you're trying to now build towards sort of what we've learned so far from a mobility standpoint, interpret what the future is going to look like, and then distill that down into areas of interest for us, right? To make that really crystal clear, whether you're an investor in our fund or you're a company looking to take money from us. And it's exciting. I mean, I do believe it isn't hyperbole to say that we're going to see more change in this industry in the next 5 to 10 years than we've seen in the last 100 across all aspects. You look at, just the buzz in the market right now about automation and AI and how that may very well either augment and or replace human workers in many cases. Every week, I mean, Jamie, you report a lot on connectivity and cybersecurity and dealers needing to become more compliant with some of these rules and regulations that are coming. And then, the movement towards sort of like the digitization of auto commerce is interesting too. We saw this real big push during COVID, obviously, where many dealers that were on the fence bought into digital retailing. And, we saw what happened with Carvana and where Carvana is currently. But, Pandora's box has been opened in terms of consumers craving a better experience around shopping and buying and owning vehicles. And I think it causes anxiety within a lot of folks. But for me, creates a lot of opportunity, I think, to look around the corner, try to anticipate what the next 5 or 10 years might actually look like realistically, and then make investment bets based on who's going to benefit the most from these trends.
It's interesting. You were very rigorous, kind of defining the 7 buckets and then, okay, within each of these, what do we think is going on? What is really happening? What isn't happening? And then where can we play in those spaces?
Right. Well, a good example, you and I have discussed in the past sort of autonomy and whether we'll ever get to sort of full level 5 autonomy for passenger vehicles. Some would argue yes. I would argue probably not, just because of the complexity of these things and the regulations coming. But yeah, I mean, we can debate these things, but it's inevitable that the cars will have more technology. There'll be more ADAS systems to protect the passengers within those vehicles. And even if we could agree on sort of like the level of complexity of technology of these vehicles, there's a lot of downstream effects in terms of dealers being prepared to service these vehicles, cars, for example, needing to be recalibrated and all these sensors on these cars needing to be recalibrated. And then just the supply chain, tier 1 suppliers and the automakers themselves preparing for this new future where these cars are effectively going to be technology devices.
You mentioned autonomy, as I want to pick at that a little more. I started reading your book, The Future of Automotive Retail, and I really enjoyed the fictional, the narrative, futuristic story at the beginning. And there is autonomy in there. The dealer drives home and then goes out to dinner, with his autonomous vehicle. And whether all of the technologies play out the way you envision them, I think what I really enjoyed about it was how you captured the idea, right? Dealers adapt, right? The business is always evolving. It is going through more change now than ever, but they will find a way. They'll figure out the things that other people can't do as well as they can and find a way to thrive and take care of their family business.
Look, one of the things that I love most about automotive news is you encapsulate sort of these stories, right? These narratives about origination stories. It's one of my favorite parts of spending time with dealers and find out multiple generations ago, how did the thing start? Running a dealership isn't one P&L. It's up to 7 interconnected profit and loss generating departments, right? That, I think the resiliency of this business model and why dealers have been so successful is primarily because as, external threats come into the business, you can reallocate your people, your capital, etc. Your transparency has brought a lot of margin compression on the front end of the car deal around used and new cars. What did dealers do as a result of that? They allocated to parts and service. They allocated to F&I. And I think it's a brilliant business model that's super resilient, largely because you don't have only one cylinder firing within the engine. You have 7 or 8 cylinders. And I think there'll be new cylinders. There'll be new departments. 5 years from now, you can mark my words, there will be a subscription department within dealerships trying to get consumers upsold on unlocking some of these features on vehicles after they purchase them. So we can let the mind sort of wander as to what the industry might look like in the future. But to your point, if nothing else, the franchise dealer model has been so resilient, right, to change and disruption over the years, because you effectively are running this very complex business where there's natural hedges within the business itself.
Steve Greenfield is CEO and founder at Automotive Ventures. Thanks so much for joining me on Daily Drive.
Jamie, thanks for having me as always.
That's Daily Drive for today. I'm Jamie Butters.
And I'm Kellen Walker. Thanks to Automotive News coordinating producer Jake Neer, as well as our own John Irwin, Gail Howe, Larry Valquette, and Lindsay Van Hully, as well as Peter Siegel of Automotive News Europe for their help on today's podcast. You can get the latest news on venture capital, the latest earnings news, and everything happening in the auto industry at autonews.com.
Come back tomorrow for a conversation with Nikola CEO Michael Loscheller about the zero-emission trucking startup's trajectory and why it's so bullish on hydrogen. If you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.